Namaste, my dear friends. Referring to you now, Foreign Trade Policy 2023 from 1st April. A new foreign trade policy adopted by the government of India with the help of Ministry of Commerce and Industry, where one of the important departmental organ is DGFT, Director General of Foreign Trade, which is a mentor to the foreign trade policy, suggesting from time to time to have effective implementation of foreign trade policy in India. This new foreign trade policy 2023 is no time limit. Earlier, we have every 5 years foreign trade policy, but here it is introduced with effect from 1st April 2023 and it continues. Any updations are required, we will update in that particular foreign trade policy. There is no time bound period, there is no expiry period. What for we should adopt foreign trade policy? The important vital point here is one of the important vital objective of the foreign trade policy, A minus B greater than 0. A is our export, B is our import. Our export always higher than that of our import, thereby we will be wind up our show with positive net foreign exchange earnings, which is essential for any country in fact. So this foreign trade policy has its own features, its own objectives to achieve the more and more foreign exchange reserves without violating international trade practices. Now referring to here foreign trade policy 2023. If you refer here, special economic zone undoubtedly contributing huge amount of foreign exchange earnings to India. They are the heroes of earners of foreign exchange. However, SEZ units, developers not falls under the category of foreign trade policy, because our foreign trade policy is under the Foreign Trade Development and Regulation Act 1992, where it is falls under the Ministry of Commerce and Industry, where the DGFT will issue from time to time notification circulars for smooth implementation of the foreign trade policy. Whereas when we talk about SEZ units, which is separate act, Special Economic Zone Act, and separate Special Economic Zone rules are there. As a result, strictly speaks, provisions relating to Special Economic Zone are contained in a separate act, namely SEZ Act, and not part of FTP. However, provisions of SEZ are closely related to the foreign trade policy, and if I conclude the foreign trade policy 2023 without referring the SEZ, it is incomplete. Therefore, highlighting first and foremost, SEZ not under the FTP, not come under the purview of the DGFT. It is a separate, but it is very closely in consonance with the foreign trade policy for mobilization of the foreign currency. We will discuss this also. Further, my dear friends, our foreign trade policy 2023 brings trade facilitation and ease of doing business, where they incorporated here the NCTF, National Committee on Trade Facilitation, which brings transparency in transactions, technology upgradation, simplification in process of import or exports, infrastructure development in terms of more and more technology, artificial intelligence, technology, informations, extracting on fraction of minutes, if not fraction of seconds, for which the technology very important backbone. Resultantly, the trade facilitation and ease of doing business to facilitate coordination and implementation of trade facilitation and ease of doing business, an interministerial body, namely National Committee on Trade Facilitation, has been constituted to have smooth functioning of the foreign trade policy in terms of transparency, technology, simplification, infrastructure. The technology is now we adopting artificial intelligence applications on oriented technology. Trade facilitation and ease of doing business furthermore brings to us under new foreign trade policy 2023 free passage of export consignment. Generally, if you are exporting the goods, the custom department assume that you are genuinely or bona fide manner exporting the goods. That means that whatever you declared in the shipping bill, export of goods, the same is containing in the container. Resultantly, when the goods are lying at container fresh station, just before loading the goods into the vessel or aircraft or vehicle, department generally not going to withhold your container for the want of verification, assuming all our Indians exporters are honest persons. With that prima facie, they are simply permitting to export the goods without much verification of that container physically, unless if the department obtains a clear-cut information with substantial documentary proof in the name of X, this fellow exporting Y product. Meaning, if he is shown in the shipping bill, he says that exporting edible sugar, whereas in the container containing brown sugar. If information obtained by the Department of Customs where with substantial evidence, then only the container will be retained for physical verification. There may be process of delay for export. Unless such information is available, in general, the department permit to export the goods without any waste of much time for export. Free passage of export consignment. We have the concept of Niryat Bandhu under the Free Trade Facilitation New Foreign Trade Policy 2023, Niryat Bandhu. What do you mean by Niryat? Niryat means export. The term Niryat in Hindi we call it Niryat for the term export. For the term import we called as Ayat. Now, in case of export of goods, namely Niryat Bandhu. Bandhu means friend. Export friend. The trade facilitation and ease of doing business brings to you the, just now I told National Committee on Trade Facilitation, which is inter-ministerial body, is acting as a export friendly. Niryat Bandhu scheme. Under this scheme, identifying the districts as export hubs, encouraging them. There are the districts in our state. Each district has its own importance of productivity. Somewhere technology product, somewhere the software development, somewhere the what we can call leather development, somewhere in any part of the country there may be highly what we call manufacturing of heavy duty machines capacity technology process districts. So identifying each district for which it is famous and encouraging them by selecting that particular district or town as export trade excellence. At the same time, the National Committee on Trade Facilitation encouraging exporters by guiding, educating them to promote more and more exports under the scheme of Niryat Bandhu. But we won't have Ayat Bandhu. Understand? Ayat Bandhu means what? Import friendly. We are not happy with the imports. Unless so warranted, you import the goods only for the purpose to manufacture and export. Simply importing, consuming in India, which is going to cause negative impact. Therefore, there is no Niryat Bandhu. There is no import friend. There is export friend only is available. Because our target is what? A minus B greater than 0. A is our export, B is our import. Encourage the exporters, discourage the importers. So, at the same time, under the trade facilitation and ease of doing business of our new foreign trade policy 2023 brought to us following online customer portal and issue of EIEC, Electronic Import and Export Code under the Department of DGFT, Director General of Foreign Trade. Now it is providing EIEC, means importer cum exporter code. You don't want to go physically to the DGFT department to ask for importer cum exporter code. They are giving you through online by promoting more digital India concept. EIEC, Electronic Import cum Exporter Code, sufficient to have for import or export, which is granting me the DGFT. Furthermore, online facility of RCMC, registration cum member certificate, or RC, registration certificate, its renewals, online facility of e-certificate of origin, certificate of origin of goods, which is important, made in India. If you export the goods to meet our objective of local to global, you are entitled for export incentives. Made in India is important. The product should be made in India is one of the slogan of our government of India to promote more and more exports. Further, my dear friends, the online facility to file quality control and trade dispute then and there, if the trade disputes are there, to rectify on war food basis. The National Committee on Trade Facilitation, which is going to look into the matters to address it as quick as possible with the help of the DGFT and under the Ministry of Commerce and Industry. As a whole, the smooth functioning of effective implementation of the provisions of the foreign trade policy as mentioned in the particular trade facilitation, ease of doing business categories, Foreign Development and Regulation Act. Further, my dear friends, Electronic bank realization certificates, EBRC. When I export the goods, I am eligible to claim duty drawback. I am claiming duty drawback. When I export the goods, I am entitled to claim refund. I am entitled to claim export incentives on account of my export. This and all will be given to you because you are going to earn the foreign currency. You are the person going to be earn the foreign currency. If you going on export the goods, thereafter going on write the bad debts, you are not entitled for export incentives. If I already availed export incentives, you return back. So here the exporter should say, no sir, I have exported the goods, payment realized sir, it may be in the foreign currency sir, or wherever permissible by Reserve Bank of India, I realized the payment, Indian rupees sir, payment came to me for my export sir. In that case, show the proof of the payment, which is foreign inward remittance certificate, FIRC. Nowadays it is EFIRC, electronic bank realization certificates. The DGFT can able to view your EBRC whether payment realized or not for your export incentives you already availed, you are entitled for that or not. There is a proof of EBRC is to be enclosed saying that yes, I have been realized the payment. EBRC not required to submit physical copies. It's nothing but trade facilitation and ease of doing business. Further, my dear friends, and we too have export data processing and monitoring system. Entire export taken place, various type of exporters, various types of invoices exported, various type of goods exported, and payment realized. The data can be able to view by the DGFT. At the same time, the exporter by using his login ID password in the system software can be able to view their flow of transaction of export and imports. This is called as export data processing and monitoring systems. Further, under the trade facilitation and ease of doing business, the government has been brought into force 24/7 help desk. Anytime, midnight 2 o'clock, you can call or phone for the getting the information. 24/7 help desk is available. Automated authorized economic operator concept, AEO concept has been developed as a tier 2, tier 3 AEO persons. You are eligible for accredited client program, thereby you are eligible for the what we can call certain facilities are available in the foreign trade policy, or one can say that you will be based on your export performance will be treated as export holder, namely star holders. Schemes are there. Furthermore, under the ease of doing business and trade facilitation and ease of doing business to promote more export, the government under the foreign trade policy 2023 has been brought into force Town of Export Excellence. Town of Export Excellence, TEE. If identifying a town of a particular district of the state in India and encouraging the exporters by giving some awards, by giving certain appreciations to them, furthermore to encourage to export, that is called as trade the towns of export excellence, TEE concept has been brought into force to encourage more and more exports. Further, we too have status holders certification scheme. Status holders means star exporters. They have assured facilitation benefits under the particular foreign trade policy in terms of import or export of their goods. Who are the status holders, star exporter, certificate holders? If you refer here, I will present here the status category. If you are having previous 3 financial year, preceding financial year, 3 financial year export performance plus current performance. Today we are in the year 23-24. Today what? Today is 23rd of November 2023. So as of today, 23-24 current year, preceding 3 financial years, their export performance, FOB values, plus deemed exports, and current financial year till the date. what is your accumulated value of export in terms of dollars? $3 million and above, but less than $15 million. In that case, you are one star export house. You get certificate of one star export house. Sir, deemed export also we are adding to identify the export performance. Deemed exports are in terms of Indian rupees, no sir. How we can able to convert into dollars? Simple. For the given financial year, refer the previous financial year, 22-23, financial year 2022-23. In that financial year, I supplied throughout the year, there are some deemed exports, namely in Indian rupees. In that case, the total deemed export in Indian rupees value divided by exchange rate of the CBIC at the beginning of the financial year on 1st April 2022, what is the exchange rate per dollar is given by the CBIC, that you have to be use it total deemed export throughout the year 22-23 value in Indian rupees divided by exchange rate per dollar as on 1st of April 2022. In that case, you will get number of dollars. So like that, deemed exports convert into dollars, and exports obviously at FOB value, which is denominating in the foreign currency. So all put together, 3 previous years plus current year as of today, all put together, no average, all just put together, see how much it is. $3 million is there, sir, but less than $15 million, sir. You are one star. Sir, $15 million is there, sir, as of today. Then apply for the want of 2 star, where you are having $15 million and above, but less than $50 million. $15 million and above export performance you have for the past 3 years plus current year till the date, but it is less than $50 million. In that case, you are getting 2 star. Sir, I have export performance as of today, previous 3 years plus as of today, $50 million, sir, but less than $200 million, sir. In that case, you are a 3-star export house category. Sir, if I have $200 million and above export performance for the past 3 years plus current year together as of today, $200 million and above is there, sir, but less than $800 million, sir. In that case, you are elevated to 4-star export house. You are elevated to 4-star export house. Sir, I have $800 million and above, sir, and without upper limit, no problem. If you touch $800 million sufficient, you are elevated to 5-star export house. The more star, more credibility, more VVIP treatment in the customs for importer exports. I will refer to that facilities what they used to enjoy. As a status holder, if you obtained star export category, in that case, my dear friend, you are consignment. If you exporting the goods, submit the shipping bill, they simply will grant latest food order. They won't verify, they won't examine your goods physically. They trust you. You are the earner of the foreign currency. You are one of the hero to earn the foreign currency to India. Status holders, if they import the goods for manufacturing exporting purpose, their cargo, when they import the goods, given a first priority to clear from the customs. Clear first, pay next concept. Clear first, pay next concept is applicable to them. And their bill of entry, when they import the goods, not subject to examination and verification. Simply whatever the bill of entry submitted by the star exporter who import the goods, accepting as such as a final assessment. Unless so warranted, they verify the assessment. Otherwise, there won't be. Unless by taking this advantage, the star exporter misusing the provisions, then the department will take the action. Unless until they blindly trust and believe of that exporter who has star status for their import export, simply clearing without any reassessment. And moreover, star exporters will have here the following type of what we can call the benefit. If you refer here, point number H here I am referring for a kind consideration. Status holders shall be entitled to export freely exportable items excluding gems and jewelry articles of the gold and precious metal on free of cost basis for export promotion subject to an annual limit of rupees 1 crore of the export. They can export freely without charging the charges for that, and moreover without any authorization, without any prior permission from Department of Customs, up to 1 crore value or 2% of the average annual export realization during the preceding 3 financial years. Whichever is lower to that value they can export. Meaning thereby previous 3 years export turnover divided by 3 average value. If the average value is 80 lakhs or 100 lakhs, namely 1 crore, whichever is less, 80 lakhs or 100 lakhs or 120 lakhs average, which is less, 1 crore, namely 100 lakhs. That much worth of the goods you can export without any prior permission from the Department of Customs, without any prior permission from the Department of DGFT, Division of Foreign Trade, not required to obtain authorization. Authorization means permission, not required. For these status holders, they can export freely without charging any charges, because sales promotion purpose, by giving the taste of our product to the importer, if it got tested, and he will definitely place the orders in terms of billions of dollars, we can able to export the goods. So in that expectation, the government under the scheme of Niryat Bandhu, yes, you export, Niryat Bandhu, export friendly. How much value of export can be exported freely without any authorization with the free of cost? Rupees 1 crore or 2% of the average export of the preceding 3 financial year. Among the two, whichever is less, up to that value can be exported freely without charging any charges under sales promotion, even without obtaining prior permission from the DGFT. They are eligible to export like that. So there are the assured benefits are available to them. Further, my dear friends, so this and all where I refer to you under the trade facilitation and ease of doing business. Further, my dear sir, under the scheme of particular star export, here to get 1-star export house status, how much export performance should be performed? $3 million and above. You know, $3 million, 1 million equal to 10 lakh. 3 millions means 30 lakh dollars. In terms of dollars, if you multiply in terms of exchange, it goes somewhere to crores. So for achieving the star 1 export status, the exporter is struggling. There may be the exporter who belongs to the following categories: MSME sector or manufacturing units of ISO or BSA mark, or northeast states. You know, northeast states, the Sikkim, Meghalaya, Mizoram, Nagaland, like that, and including state of Jammu and Kashmir units if locating there, or units located in agri export zones. For them, the value of their export very less, but they have aspiration, anxiety, interest to get 1 star, but they are unable to reach because the value mess of their export less. So encouraging to them for obtaining 1 star alone, there is double weightage. For example, my dear, whenever I want to claim as a MSME sector, the star 1 export house status, I am not able to meet the requirement of $3 million and above. I may be falling at $2 million, $2.5 million only. Whenever I compute previous 3 years plus current year, I am falling below $3 million. But I have very much interest to get 1 star at least as a star exporter. I will furthermore work hard to produce the good quality of product to export. So, identifying the need of this industry, the foreign trade policy said, yes, hey Mr. Exporter, you are from the MSME sector, or you are from Northeast states, or you are from Jammu and Kashmir, or you are a unit located in the agri export zone. If so, for you, for obtaining 1 star purpose, we will double your export performance, thereby at least to catch 1 star export house certificate. Suppose if I am, as of today, my export performance for the past 3 years plus current year as of today, $2.5 million, my export performance. If you double it, $5 million. If you double it, $5 million. Resultantly, I can ask for star 1. So, such a star 1 certificate purpose, double weightage has been granted to encourage the exporters. But it is not to 2 star, 3 star, 4 star, 5 star. There won't be any double weightage. Only to obtain the star 1 double weightage. Such a double weightage is given only once only for obtaining star 1 export house status. That's it. Further, my dear sir, what do you mean by authorization? Just now I said to you, permission. From whom? DGFT. For what? For import or export, wherever is required. For general goods, no need of any authorization. For prohibited goods, for restricted goods, obvious authorization is required. If I am importing the explosive devices, I have license because I am importing it for the want of a manufacturing of explosive devices. I am importing certain material which is prohibited. But for me, I am a license holder. In that case, permitted to import, but I have to obtain prior permission from the DGFT, namely authorization from the DGFT for import. Further, my dear friends, merchant exporter, none other than who is neither holding a manufacturing unit nor holding a process unit. What do you mean by manufacturing? Manufacturing of goods like laptop, televisions, cloth. Processing unit means food item, biscuits, bread, this and all. So in the given case, who is a merchant exporter? Neither holding manufacturing unit in India nor holding processing unit in India. But that merchant exporter in India is to obtain overseas orders for export. He has overseas contracts, thereby he getting the more and more orders, but not in a position to manufacture in India. Therefore, that fellow is placing the order in India from a manufacturers and procuring the goods, and that procured goods as such is exporting to overseas buyers from whom he obtained already orders. Therefore, that particular exporter is called merchant exporter. The person who manufactured in India supplied the goods to such merchant exporter, we used to call it as deemed exporters. I will explain this concept under the concept of third party export. What do you mean by third party export? LM Corporation is one of the unit in India received orders from the overseas buyer. To fulfill that order, he placed the order in India to procure the goods from a manufacturer, ST Corporation, who manufactures the goods and supply the goods to LM Corporation. The LM Corporation, after receiving the goods from ST Corporation, exporting the goods to USA by mentioning the name of ST Corporation in the shipping bill which is submitted by the LM Corporation. Then LM Corporation is called exporter, technically called as merchant exporter. ST Corporation is called a deemed exporter. Only when shipping bill submitted by the LM Corporation should be containing the name of ST Corporation, then only it is whole good as a deemed export, otherwise only export. Now you said third party export. Yes, ST Corporation exporting the goods to USA through a third person, namely LM Corporation. Therefore, LM Corporation is third party through whom this particular ST Corporation exporting the goods, because ST Corporation has no direct contacts with the importer. Therefore, ST Corporation supply the goods to LM Corporation. LM Corporation further subsequently same goods are exporting to USA importer. In that case, the export is called as third party export. ST Corporation export the goods with the help of LM Corporation, which is third party. ST Corporation is a deemed exporter only when LM Corporation mentioned in the shipping bill which is submitted for export the name of the ST Corporation as a supporting manufacturer. Further referring here, my dear sir, presenting, we too have ITCHS, Indian Trade Classification Harmonized System. Schedule 1 talks about rules and regulations relating to import policies. Schedule 2 talks about rules and regulations relating to export policies. Under the Foreign Trade Policy 2023, we have ITCHS. Schedule 1, rules and regulations for import. Schedule 2, rules and regulations of the export. Where what is broadly it says means it has free, restricted, prohibited, manner classified. What do you mean by free? Free means not free of cost. Free means without obtaining authorization from the DGFT, import export takes place. Without obtaining authorization, it is sufficient to have importer cum exporter code from DGFT, sufficient for exporting or importing of the goods. Need and wanted to obtain prior permission for export or import is called as goods are trading freely. Restricted goods allowed to export but with particular limit. Such cases, the restricted goods where the permission should be obtained from the DGFT, namely authorization warranted to export such restricted goods. Prohibited goods generally not allowed to export or import. If you are entitled to export or import, then there must be authorization from the DGFT for import export, which is one can able to view in this particular harmonized system of nomenclature. Indian Trade Classification Handbook separate it is there. Your separate book it is. 500 pages is very bigger. The customs advanced concept of customs law is the foreign trade policy, and the DGFT is to formulate rules and regulations and issue from time to time notifications with the help of under the Ministry of Union, Ministry of Commerce and Industry, under the Foreign Trade Development Regulation Act. Whatever circulars are issued by the DGFT, Direction of Foreign Trade, is a final binding on importer exporters. CBIC has no role to play here to issue any circulars. Customs Department side, yes, CBIC. DGFT, foreign trade activities where circulars issued by the DGFT is final, not by the CBIC. Further referring, my dear friends, as a whole, I used to say the Direction of Foreign Trade is a mentor under the foreign trade policy, under the Foreign Trade Development Regulation Act, under the Ministry of Commerce and Industry. The DGFT department is playing a vital role. Further, my dear friends, the whole holistic idea of foreign trade policy only to promote export promotion schemes, nothing else. Entire holistic idea is to promote export promotion scheme. What are the scheme we have under the foreign trade policy 2023? The following: one, duty exemption schemes which containing advance authorization scheme, followed by duty free duty free import authorization scheme, DFIA. There are two schemes under the duty exemption scheme: advance authorization scheme followed by duty free import authorization scheme. I will explain each one elaboratively. Further, we too have duty remission schemes. Under the duty remission schemes, you already covered by understanding duty drawback scheme. Now I am going to take up here under the Foreign Trade Policy 2023, remission of duties and taxes on exported products, RODTEPS, remission of duties taxes on exported products, which is a merger of the MEIS and SCIS duty kit scripts. It is RODTEPS, a new duty kit script which can able to identify and understand subsequently. Further, under the export promotion schemes to encourage the exporters to meet the objective of A minus B greater than 0 concept, A is our export, B is our import. In that case, referring here further, the export incentives under this foreign trade policy, EPCG, Export Promotion Capital Goods Scheme. I will explain to you elaborately about this particular EPCG scheme. Further, we have the following schemes called as EOU schemes, EHTP schemes. You know EOU, 100% export owned unit. EHTP, Electronic Hardware Technology Parks. STP, the Software Technology Parks. BTPs, Biotechnology Parks. Schemes we have to encourage the exports, followed by deemed exports. Under the GST law, section 147, the deemed exporter is eligible to claim refund of IGST paid on supply of deemed exports. So the concept encouraging the exporters as well as deemed exporters, deemed exports concept is there. Of course, special economic zone highlight with the red color because special economic zones units not come under the export promotion schemes of the Foreign Trade Development Regulation Act. It has separate act, Special Economic Zone Act and rules. Comes under the Ministry of Finance, not under the Union Ministry of Commerce and Industry. But we will refer the SCZ units, without which our foreign trade policy is look like incomplete. So actually now where we are now at the particular duty exemption scheme. Here we are, from here to here and thereafter to here, thereafter to here. So 2, 3, 4. The moment we touch and explain special economic zone, our foreign trade policy, which is applicable for our exam, Foreign Trade Policy 2023, will get complete. So we are now is with duty exemption schemes going to be start the important content of the foreign trade policy, namely called as duty exemption schemes. Under that, advance authorization followed by duty free import authorization.